All right, good morning, good afternoon, everybody. This is Trendy John from Simpler Trading. Today is the 1st of December, 2024. I want to say welcome to all of our new traders, but also welcome to December. I can't believe that we're right around the corner from ending this year. It's been a fantastic, fun, enjoyable, eye-opening year, and I hope you guys have learned a lot. I just want to say I really do appreciate you, and thank you for all your support. In saying that, if you wouldn't mind just taking a few minutes and going ahead and hitting the like button, be sure to share this video with any friends and family. As you all know, this information allows me to get the edge on the market and to identify supply and demand with you and look for those high probable areas where the market will turn and where we want to align ourselves with the bigger money. Now, we are going to start this week by going over this week's major U.S. economic reports and Fed speakers. Before I do that, I just want to say I'm supposed to be speaking in Sarasota this Friday coming up. I'm supposed to take my journey and drive down there. It's about 10 and a half hours. And believe it or not, even on a plane from here, I'm looking at about 10 hours because of the stops. Unfortunately, I'm a little under the weather. I'm trying to boost myself out of this, but I'm pretty sure I came down with some COVID over the last couple days, and things just seem to be getting worse. But I am knocking on wood right now, and hopefully we'll feel better. I would hope by Tuesday. If not, then I will most likely have to cancel. I'm just giving you a heads up. The next thing is that with this week's major U.S. economic reports and Fed speakers, I want everybody to understand this is just a catalyst that moves the needle to price supply or demand. Our job is to identify those levels, be ready for that bigger turn, and take our trades based off of those levels. So this week, Monday, tomorrow, the 2nd of December, you're looking at PMI and then construction spending and ISM manufacturing. Tuesday, job openings and auto sales. Wednesday, ADP employment, Fed speaker, PMI, ISM, factory orders, Fed beige. Thursday, initial jobless claims, U.S. trade deficit. And then on Friday, U.S. employment report, hourly wages, consumer sentiment, and consumer credit. So it doesn't look too boring. It looks like we might actually get a little bit of volatility. And with the market, some of the markets breaking to all-time highs, it could be very interesting. I can't wait to get to the charts. Let's go ahead and move on to the next most important thing for this week, and that's, I love earnings. We're kind of getting to the point where they're starting to trickle off, right? And we're getting into that slower period and ramping up for Q1 in 2025. But we still have some good names out here on the calendar. A few that I'm interested: Zscaler, Salesforce, Okta, Marvel, and then coming over here on Wednesday, Chewy, Five Below, Dollar Tree, and then on Thursday, Dollar General, Lululemon, Path, Ulta, DocuSign, Signet. I love to hear about these guys because, they're in the jewelry business and with gold at all-time highs. I just want to see how everyone is doing under this umbrella, if you will. Signet owns a bunch of the jewelry companies that are out there. And then moving on down, that pretty much is what I'm interested in. So we'll go ahead and move on to our next chart, which is going to be TradingView. We're going to look at the quarterly candle. This is very important. This has kept me on the right side of the market for the most part. I'm not perfect. There were some times in here that were very difficult, I thought. But overall, this thing has really saved me in looking at the big picture, and I wanted to help you as well. As far as this week's notes, the bullish channel worked. We talked about that in the previous note. And prices indeed closed above 600. We were looking for targets above 600. Note that the quarter candle is creating a lot of space between the 9 EMA and price. And what I'm referencing is this 9 exponential moving average here and where current price is. The deviation between the two, there's a lot of error below there. So it's just very important to just kind of keep note of that. The last sequence, though, above the quarter 9 EMA, that was also stretched, lasted 7 quarters. Okay, so what I'm looking at is this right here. Once we went above the 9 EMA, we had 1, 2, 3, 4, 5, 6, 7. And in this sequence, we pull back, We got back above 1, 2, 3, 4, 5. So all I'm saying is it could continue even though it looks a little overextended. Just something also to think about. We are currently on number 5. So 595 for this week is our immediate support. And then our longer term support comes in at 557 and 530. And then the 614 is our next target. So $614. I'm just simply using an exponential moving average here. Or sorry, a Fibonacci extension to the upside. We've already hit our 595, closed above the 600. And once again, I'm looking for 614. Okay. The next chart that I'm going to be looking at is going to be SPY with fibs. Okay. So I'm going to pull out Thinkorswim here really quick and just show you what that looks like. So this here, we have our demand zone, and it happens to come in around the 38.2 and the 50. It's also confluent with the 50 fib by measuring from this coefficient or from this price point into here. So a lot of confluence here. If for some reason we were to have a sharp pullback before the year ends and it kind of comes as a surprise, this is where I'd be looking at buying the dip going into Q1. Okay, your golden Fibonacci, why this is important, all I'm basically saying is this area that I have measured is not broken unless we close below that 581 level. And if we do that, it is possible we could see 575 to 571. Let's go ahead and move on to the QQQ. All right, so on the Qs, same thing. We're going to be looking at the quarterly chart here. You guys can see it looks pretty nice. It looks stretched as well. We continue to make, new highs, but we have not made a new all-time high for this year. And I'll show you on a smaller chart here in a second. The levels held, we got our gap fill. That's exactly what we talked about last week. We got that. We expected immediate resistance at 513. Right now, I expect immediate resistance at 513.25. That's going to be like your line in the sand to the upside this week. And a hold above there in a base, we have a 95% chance of a new all-time high this year. So when I say we didn't make an all-time high, I just mean we haven't made a new all-time high. Okay. Immediate support is 507.5. Overall, I want 505 to hold by Friday's close. Those are my major levels to the downside. Big picture, 474, 475 by 450 is our support for the bigger picture. Now let's go ahead and look at Thinkorswim as well. And we are going to look at the weekly chart on the Qs. Once again, if you guys wouldn't mind, just take a second, hit that like button. I really appreciate it. And if these are helping you, let's hear about it. All right, so same thing here. This is the weekly. You guys can see that. We have some Fibonacci's on here. The bull channel is 503 by 508. Again, as long as we're holding these levels, I feel really good about the upside potential. And, once we do bid above this level around the 512 area that I was talking about, I believe we could see a 95% probability that we will see a new high. As far as like extensions and stuff go for right now, 521 is possible. And if you look over here, we're looking at 524. So let's just say 520 to 525 for right now. Okay, let's go ahead and minimize that. And we've already discussed the notes. Again, everything looks really, really bullish. I'll get to my sentiment here a little bit later towards the end when we go over future charts. Next thing I want to be looking at is going to be over here on TradingView. We're going to look at the dollar. All right, so here's the dollar. All right, and I heard there was a little tweet that came out from Trump this past week, or just this past day or so, about the dollar. So it should be interesting to see what's going to happen this week. But nonetheless, charts are the most important part about this. And as you guys all know, I'm 100%, well, I should say 99.5% technical. And that leaves a little bit of room for some open, conversation about other things. But as far as this is concerned, we're getting exactly what we wanted. Price did pick up and move into the supply zone that we talked about last week. We got to the distal line of the supply zone. I was looking for a rejection. We got that. Not only did we break down, but we're headed into this demand zone that I was looking for. So if we don't get over the highs, I do project that we're going to move down here towards 104.7 to 103.1. Okay, again, if we get down here, please be cautious. If the dollar dips in here, we can see it bounce. This is a demand zone, and if we're looking for the dollar to bounce, you'll most likely see the overall market kind of slow down, choppy, probably sideways to down until, you know, we see that there's more of a sell-off, I guess you could say, with the dollar. Now, the dollar liked, you know, several years ago. You know, the dollar liked when Trump was in office. And so it's important to also like respect that and understand. So we may have a little bit of a different look. So my disclaimer is that the overall market could continue to melt up regardless if the dollar decides to go up. We'll see. Okay, so I don't want to make any speculations, but far as the last year is concerned, we're just talking about this year, that anytime we came up into supply and we're looking for the dollar to break down, the markets were moving up. Anytime we came into demand, the dollar moved up, and then the markets got a little bit more choppy. Okay, so again, if we come down to here and we get a bounce, you could see that the market starts to get a little choppy, which really makes sense when we look at the fear and greed and the skew and so forth, and we'll get there just here in a second. All right, so let's take a look at let's look at the TNX, the 10-year treasury. All right, we're going to take a look there. And same thing, guys. We hit the 618. I was looking for the rejection. We got it. Price did pull back. My only notes for this week is that I expect range to be 4.4 to 3.9. The only time I would be concerned about a panic is if we get over 4.9 this year. Okay. Next thing that I want to take a look at with you is going to be the skew. This thing is really on the brink, all right, of being, this is extreme caution for me. As I've shown you, you know, 1,000 times, I feel like you guys can see that anytime the skew gets to these levels, if you were to put the SPY or the Qs behind this, the market pulls back. All right, so this is 100%. I'm saying be cautious. It doesn't mean that we can't take a trade to the upside, but what it does mean is if we're making profits, maybe we're taking profits a little bit sooner than normal. All right, so meaning if I typically take a profit at 50%, it might be 25%. I'll scale out or something like that. Okay, so again, just recognize that we're up here in nosebleed section, and the overall market and or the hedge funds are saying, hey, little bit, let's be protected here, risk off in this section. Okay. Next thing that I want to take a look at is going to be the fear and greed index. So as of today, it's at 66. It's in the greed. And like I've always said, this thing can still rev all the way over here towards this way. So there is still room for the market to get extremely greedy. So don't get it twisted. All the things that I'm showing you, price is king. These are just notes that I want you to have in the back of your head. There are signs saying that we could potentially pull back a little bit. And really the pullback, maybe it's not that deep. Maybe it's just a minor blip on a smaller time frame. And we end up just buying the demand zones on a 4-hour or something like that. Okay. All right. Next thing we're going to look at are the future charts. Let's go ahead and get over there. So we're going to get right here on the ES futures. Let's go ahead and click here. All right. And let's start with the weekly. Not a lot has changed. We did make a new all-time high. We are, what I think is really big about this, and that is the double inside and up formation. These are powerful. They are very powerful. They're very high probability that we continue to move to the upside. I did print a buy signal on my chart from the trendy indicators. My trendy indicators work very, very well. They're not 100% though. So again, in saying that, we have a if this, then that. I like to see price get over 60, 61 and hold value. Then I think we could head up towards the 6,100 level. As long as this double inside and up holds structure, then I believe we continue to move up. But that's also an area if we break below, okay? So if for some reason we break below the structure, it's also an area where I'd be getting long. So it's a bit of a price discovery. I mean, it's kind of wide is what I'm trying to say. So down here by the 9 EMA, it's about 5,900. And you can see we're at 60.51. So we don't want to be late on the short idea, But we also need to have something to reference on a smaller time frame if we want to get short, and I'll get there here in a second, okay? So again, if this, then that. If we can get above 60, 61 and hold value, I do believe we're headed to 6,100, but we'll wait to see if we can get there. I'm not concerned unless we break structure, but by that time, we're already down at that point, you know, a lot of points, all right? So again, the small picture is important, but far as the weekly is concerned, as long as the structure holds, I'm looking for price to move to the upside. In the event that we have a bigger pullback than I'm anticipating, which has happened this year, I would be looking at getting long around the 59.20 level all the way down here to 58.39. Just want to bring those up just in case, okay? Next chart we're going to look at is the daily on the ES futures. Couple things here, the election imbalance, just want to keep note if for some reason we were to come back there. I definitely love this area to get long. My buy trigger came up on one of these. I left this one here, but I brought one up this week that is around the 6,000 level, and our resistance level is going to be 6,053. And then my short trigger, what I'd like to see is 62.29 before the end of the year, somewhere in this area anyways, or close to it. But again, I'm not going to give you a short trigger based off of this daily chart. That might happen over here on the 4-hour. So my 4-hour note is that we're above the 4-hour cloud. The cloud doesn't now support until proven otherwise. You guys could see when we zoom in here. Let me take this red off, and then we'll put it back on here in a second. When I zoom in here, the 9 EMA is right here. And again, as long as we're staying above the cloud, which if I outline it, this is what it looks like. As long as we're staying above there, I continue to stay bullish. Now, from a more aggressive way of being short, if we cannot sustain value over 60.50, stay short with a stop above 60.55, 60.60. So it's not bad. It's only about 10 points. So all I'm saying is if we reject and we start to break down here, we can look to sell credit or just go short and have our stop here. By the way, we had an amazing trade last week. Around Wednesday, we got long at 6,008 in the futures, and we ended up selling all of our contracts at the end of it at our target, which was 60.40. So congratulations on that as well. All right, so again, 4-hour, immediate. If we start to fall under 60.50 and you feel aggressive, the idea for me would be short with a stop above the highs, okay? So if we build value above there, great. Then I believe we're headed towards 6,100. Okay. I feel like I made that pretty clear now. All right. So next one is going to be the NASDAQ. Let's go ahead and get over here. And let's get over to the weekly, just like that. And over here, price held the support level. The support level that was there before price got there. Worked very, very well. You guys can see we're riding the 9. It looks great. My overall sentiment is bullish, but risk off under 20,750. So again, under 20,750, risk off in the NASDAQ for me. All right, let's go ahead and move on. So on the daily, we are keeping, I want to say we're keeping the same levels. Yep, same levels as last week. You guys could see it worked really well. This was your buy trigger. So if you bought here on the pullback, it worked very, very well for a good 200 plus points. We stopped at the resistance, the same level that I gave you last week. And so it worked well. We are underneath a little bit of supply. In order for the NASDAQ to look really good, we're going to have to get above this resistance level, which would be the proximal level of a supply zone. So above 21,000, let's round up, 21,050. We need to see a base above there. And then your next level of resistance is going to be 21,178. And any value above there, we most likely break into all-time highs. My overall short trigger, again, it all depends on the lower time frame, so we don't just blindfold, short, long, those type of things. But these are suggested levels where I would see some sort of rejection, and just like this is suggested level where we would have saw buys, and we can see that they've worked out very well. Okay, so those are our levels going into the daily. And then over here on the 4-hour, you can see I've not changed these charts. They have worked absolutely amazing. We went from demand to supply. We pulled back. We created a little bit of demand. We pulled back on Friday into that demand. We pushed up. And I do believe our target is right here, again, suggesting that we push up into supply again. We need to see a new higher high above this level, and if we do so, again, I really feel like we're trying to push up towards the ATH, or the all-time high. All right, so that leaves us with our next chart, which is going to be the Bitcoin. You guys know I'm in crypto. I continue to buy the dips when I see them. It's an account that I just don't want to close, and what I basically do, just kind of give you some reference, I put $1,500 in there once a month, and then I just look for the dips and I buy. Now I also have equity in there, like CrowdStrike, stuff like that you guys are aware of. That account, I believe, is up 55-60% this year. It's looking really well. It's a long-term account, and a little bit of feedback. Don't beat yourself up so much. It's a note to myself, especially this year, in looking at that account. It's really fun to just like not sweat things. As a day trader, we go through a lot of stress and we put a lot of pressure on ourselves. But at the end of the day, picking good companies and good names and just dollar cost averaging into them has really worked out. And it's really takes the stress off of things. I understand like it's going to be stressful as a day trader. We get that. It's part of the job. But just know that you can also have some money on the side and just kind of relax and have a good time. And you learn a lot about yourself and about trading and about investing. All right, so Bitcoin futures, let's go ahead and click on that. Again, we closed out here around 98,540. Just like last week, I'm about to open up my Robinhood account and take a look at Bitcoin just to kind of see where we are at the moment. And this is showing about 97,280. So down from, where this was on Friday. Now, one correlation that I've seen, like I've said, is when Bitcoin's down, the market seems to be doing okay. When Bitcoin starts to really bid to the upside, market seems a little reluctant to get going. Friday, it kind of threw that to the side and said, hey, let's all like work in tandem. And I really enjoyed Friday, and I hope you did too. So overall, it was a great week. I hope that you guys had fun trading going forward. Like I said, as a reminder, I'm headed to Sarasota if all goes well. If not, I'll let you know if I have to cancel. Either way, I'm here for you guys. I really appreciate you. Thank you so much for tuning in, and I can't wait to trade with you guys tomorrow.